Afternoon, everyone. What's going on, guys? What's going on? What I got a notification for? Oh, what a day. I gotta say, I mean, Bulls tried. I think they tried their best today, and that just was not enough. I mean, the bleeding just continues. I think either you're relentless to try and fight the trend, either you were smart, you got in early, or right now you were just staying on the sideline waiting for that opportunity to buy. I think that's pretty much the three scenarios right now. If I want to say, it does seem like a lot more so other traders are pretty much on the sideline, just kind of just waiting for that moment to really just go in and try and buy the dip. That is kind of the thing. Most of everyone that I've spoken to is pretty much just on the sideline, kind of just holding their money right now, waiting to pour it into the market. That's kind of just been the sentiment of what I've heard, what I've been speaking with other traders. I can't blame you, and I think right now, if you would actually tried the past, well, I want to say what 4 or 5 days here of fighting the trend, you basically saw kind of the same scenario at the very best of what we saw this morning, in which it was just relatively a pump and dump type of scenario. That's basically what we saw. I did come on live yesterday, and I did say there was going to be some kind of relief, right? I was anticipating that we would more so see the relief that we got this morning, but we would be able to sustain that little gap up that we had this morning and kind of snap this little red streak that we've been in. But the bleeding continues. I think we're sitting on roughly our sixth day of red right now. We basically kind of just no. It was a good sign that we end up rebounding off of the lows today. That was a little bit of a good sign. We did hit a key level off of our monthly. That was something that's pretty much intriguing to me as well here today. We hit the 50 EMA off of the monthly chart on SPY here. So I'll kind of give you a glimpse of what I saw for the monthly, and that's usually in the back of my mind. It's like, okay, when you're in doubt, zoom out. And I think Avery kind of said that headline today, so I'm kind of stealing that from him right now. He did say, especially when you're looking at these smaller time frames, you're looking at maybe the 5 minute, the hourly chart. When you are in doubt of that, in terms of direction, zoom out, look for your key levels, look for those EMAs in which maybe you're pretty much trending towards a specific EMA or a marquee EMA, maybe specifically a 200, which is a very pivotal reversal spot. This is exactly what you want to do is zoom out and kind of look for those big levels. All right. So that's what kind of stood out to me. I did see someone say we have Fed speakers again tomorrow. That'll be something that's interesting. Maybe that's just a catalyst we need for some kind of Fed tomorrow. Maybe one of those Feds tomorrow to give us a little bit of a hope for the market to give us a nice little catapult. But here's what kind of stood out to me this morning. In which case, why I say, um, no, I wasn't too much. Obviously, I expected to snap the red streak. But what was more concerning in terms of holding that little morning gap up that we had and sustaining any kind of momentum was that if you did see the two tickers that actually stood out in terms of the tech sector were primarily Tesla. I think it was already up nearly about double digits almost at the market open, about 10 to 11 points up at open. And then Apple trying to give us a little bit of a relief. That was pretty much the two things that stood out to me. But what was more intriguing about that is that in order for us to pretty much sustain that gap up that those names had overall in the tech sector, I actually started to see Microsoft started to fade. I saw Meta starting to fade, and I was actually pretty high on Meta yesterday. Those two names started to fade, and then we saw everything else in the tech sector just start to regress, even though Tesla and Apple were the first two to kind of give us that catapult right out the gate at market open. So that was where I started to say, if the market was going to sustain that gap up, if we were going to see a meaningful snap of this little, multi-day red streak, we were going to need to see more names outside of Tesla and Apple give us, some further momentum off of that gap up. That's not ideally what we saw, and that's what gave me that indication that we were likely going to see the market at some point, whether it be at the end of the day or rather tomorrow morning. I kind of got that indication that the market was going to regress, and that's exactly what we saw to drop into a new bear market low today. All right. So I usually always point to the fact of every morning looking to see where your relative strength is. I kind of just point out the fact that Tesla and Apple were where that relative strength was this morning. But then you also need to see when you get these strong gap ups, you need to see momentum outside of the other names other than your leading momentum plays, right? Outside of Tesla and Apple, you needed to see something else, specifically maybe a Microsoft, to kind of give you that further momentum for the Nasdaq to go up, because we were up 200 points and Tesla was already up double digits, which to me was kind of insane at that point. I mean, there's no way that Tesla itself takes us higher, and I see the rest of tech just start to regress. So that was just my warning sign this morning, and that's just something I wanted to share with you guys. But as I kind of get into futures here, like I said, we're kind of in our little bit of our sixth red day here, kind of in a zone here where obviously I'm looking for a snapback, looking for futures to cross above this convincingly over 37.44. We got close enough today, but we were not able to break over that mark to get a further momentum. So 37.44 to the upside is what I'm watching for to give us a bigger catapult in terms of a reversal. Otherwise, I do fear that we're going to sink down towards this low 3600 mark, and that'll be where I'm going to be particularly looking for the bears to get squeezed out for whatever kind of rally we potentially get, however short-lived it is. That's the spot that I'm looking for. A little, pretty much a mean reversal to pretty much short the no, give a little bit of a short squeeze and trap the bears. All right, so 3600 is the mark to the downside that I'm watching for if we end up gapping down overnight. That'll be a level that I'm going to look forward to pretty much either we maybe overshoot to the downside or reclaim that 3600 mark, but that's going to be a very key level for me over here tonight. And then flip side, like I said, I'm looking to pretty much reclaim this 37.44 mark is what I'm going to look for. That was where we actually based when we started our initial rally from the beginning. I want to say the third week of June here. We based off of that 37.44 mark on three different occasions before we had liftoff, and we saw that remarkable little miniature bear market rally that we had starting in June. So I'm going to look to see if we now reclaim that 37.44 as a support rather than at acting as a resistance right now, and that's what pretty much just marquee level that I'll be keeping an eye on. All right. So obviously, bigger picture though, you can see the little descending broadening wedge. It happens to be one of my favorite patterns. It's just a matter of timing that reversal, because once it does give you that nice reversal, you're going to see a mean snapback, and you could kind of replicate this little miniature bear market rally we had that started at the end of June. That would not surprise me. It's just a matter of how much lower do we go before we see any kind of meaningful rally here, whether it be going into tech earnings that we have coming up shortly, or they continue to just keep us sideways chopping into lower lows into the end of the year, in which case maybe we end up not even seeing that rally until a possible Christmas rally. All right. So that's just kind of just things in the back of my mind, just looking forward, that I wanted to share as well. I did mention that I was going to share off of the monthly here. Like I said, we did get close enough to that 50 EMA here off of the monthly. If I kind of zoom as much as I can here, you see the little orange line. That was basically our 50 EMA that we're pretty much just breaching here today. So that's something that stood out to me. If I zoom out here just a little bit, you can see there's about two to three occasions that we've actually hit that orange line, particularly, and I'm kind of going back here maybe about a decade or so. I think that's about fine. We smacked that 50 EMA dating back to February of 2016. And again, we touched that 50 EMA dating back towards December of 2018. And then the last occurrence was the COVID crash. So it's a positive sign that we're right at that 50 EMA. It would make sense to pretty much get a nice little uh, rally or some kind of a bottoming short term bottom. But obviously, I'm just kind of giving you the indication where if we end up breaking down below this 36.14 spot, then obviously that's when things are going to get progressively worse, and we're going to see a breakdown even further. All right. Will AA, by the way, what's going on? I don't know if I mentioned what's going on. Will, what's up? Tech earnings don't sound bullish to me though. Will, I am with you. I don't think that tech earnings are necessarily bullish at all in any circumstance. But two things that it could be either or, particularly, is that it would kind of make sense that we get whatever, and I'm saying short term momentum or short term rally, particularly. It could be the sense that we get a little bit of a rally, short term rally ahead of tech earnings, as maybe a run up towards tech earnings, or particularly we continue to stay in this bear market, quote unquote, just continuing to bleed endlessly, staying within a chop zone down here. And we don't particularly see any kind of upside more so until the end of the year, in which we get a Christmas rally. So that's where I'm at in terms of potentially where and when that rally is going to happen, in pretty much a case of what we saw in the end of June. that we had that multi-week, I want to say multi-week rally that we particularly had before we had this meltdown. All right. Dave, can I talk about Netflix? Sure, why not? See what's going on with Netflix. One thing I will say, and that's kind of just obviously zooming out. One thing that's actually a little bit more of, I want to say it's a little bit of relief, is that you already did touch the 200 EMA on Netflix off of the monthly, so that was a good sign. We already saw the little bit of relief, pretty strong relief we've relatively had on Netflix already, given the fact of how much the market continues to sink. But then going off of the weekly chart here, this is not particularly a good sign here. And this kind of just gives me a little bit of an indication that you can kind of see a nice little wedge closing in here. I think it does look better on the daily. But the other factor is that you were not able to pretty much get a convincing break over that 20 EMA here off of the weekly. And then zooming down as I kind of get into smaller time frames here, you can basically see you have a little bit of a double top type of formation here off of Netflix. That's not something that I'm particularly sound about in terms of saying that there's going to be a positive upside in terms of breaking that high that you had dating back to September 20th, and then yet again dating back towards the middle of August relatively. So that's pretty much where I'm not convinced that you're going to see a meaningful upside beyond what I want, quote unquote, is looking like a double top right now here off of the daily. So if I were to say, I do think that you can get a little bit of a bounce, particularly. I see upside up towards 234. That's roughly about a $10 upside from where you're currently sitting, in which that may end up being close enough to about a halfway back of this little overall downtrend dating back towards your second top of September 20th. So 234 seems reasonable to me if we're going to get a bounce, but I do not like the fact that it does look like a double top. It does look like you have a pretty clear neckline here sitting at this 214 half, and then that'll drop you right into my first support, roughly sitting on that 211 half. And if you lose 211 half, this is where it's going to get rather ugly, and you're going to end up retracing about this halfway mark from where you basically had of your I want to say your bear market low here so far. So it's going to be coming down. If you lose that 211 half, that's going to be a rollover down towards 196. At what given point that takes place, that's obviously the question mark. But just keeping in mind level by level here, I would watch for whatever bounce that we can get short term here up towards that 234 mark. But then once we start to roll over here, then that's going to be where you're going to break your neckline and your first support levels at that 211 half. All right. Um, Will, so I think I just covered. Well, Dave, I just covered Netflix for you. AA, can I look at DBN? I looked at it yesterday, if I'm not mistaken, but I'll take a look at it yet again. And Will, you got two requests. Let's see. Can you tell me what and how to play Nat Gas? All the companies have low option value and shares upside seems not too great. Well, it does depend on particularly what name in particular you're kind of looking at for natural gas. If you kind of give me a name, then maybe I can kind of point you into specifically, levels maybe. But in terms of just give me a broad perspective in terms of low option and just shares upside, that's a little bit of a broad. I can probably give you a few names. If you actually DM me in Discord, I'll probably drop you a few names on natural gas in terms of giving you some pointers and a few names specifically. I think I have a list somewhere saved on my desktop. I do think I have a few names for natural gas. So I'll take a peep at it after my live here today, and I'll look at that. But just drop me a message and I'll take a look at it. All right. LNG, I'll take a look at that one for you, not a problem. Let me take a look at AA. You mentioned DBN. Let's see what's going on with energy here. Well, kind of looking at this one, I do see that you did break below the 200 EMA. That's not a very relatively good sign here. So upside, you're looking at you want to reclaim 5780 as your upside here. If you can reclaim over above 5780, then it looks like you have a shot of at least testing gap fill at that 60 half. Otherwise, I would pretty much be in the camp where I would look more so for the support to buy off of support here. The more meaningful support that I'm watching is roughly around this 54 mark. That's where I'm particularly looking at for this one. I'm just looking at that right now. If I kind of just draw a line here, and you'll notice If I actually see, this is basically where you hit a nice little peak dating back towards the beginning of the year in January, the end of January. You teetered that level quite a bit until you broke out towards the third week of February. You started that nice rally. You retested that level, had a meaningful reversal at 54, and then you get again pretty much dating between, I want to say, towards the third week to end of June. You teeter that 54 level as a support to resistance. So I would anticipate you're going to get that leg down towards 54, and I would more so rather try to buy off of support than try and chase it uh in terms of getting a reversal right at this current level above that 57 spot. So look to buy off of support here. I think that 54 spot should be some more meaningful support, and that's what I would particularly look for. All right, A. So hopefully that kind of gave you a better idea there. Let's see, what was the other name? You mentioned LNG. Let's take a look at LNG. Actually, not a bad looking chart, I will say. LNG actually looks pretty solid in terms of the level of where you particularly stopped. You did literally bounce right off of that 100-day EMA. I think that was a pretty positive sign off of where this actually is holding. So that actually may have been a pretty good one that you picked out there, Will. I do actually like this one. Really solid spot that you're particularly holding. Obviously, this kind of gives you where your defined floor is right now. As you mentioned, you're trying to get into shares. Ideally, that 148 spot close enough. Yeah, I want to say 148 was that level in which you particularly had the nice, reversal. You smacked that 100-day EMA right there, and particularly as I draw a line, you can basically see that's the spot also where you kind of got a little bit of a topping, a little bit of a reversal, dating back towards the beginning of May. And that was the level, particularly where you also teetered as a resistance multiple times, hitting your head towards the end of July to the beginning of August before you had a very clean breakout. So it was a very sound spot that it ended up retesting. Ideally, of course, you want to see that hold as support at that 147 spot. Now, here's the thing though. In which case you're trying to buy, you are smacked between two particular levels here. In which case, I would say you either wait for the break to the upside or you wait for the retest of support. So either you can break once you can either get in on the break over 155, in which that's the level of where you had a nice little, you want to say quote unquote little double top type of action here. But that's your neckline roughly at that 155 spot. If you can reclaim the 155 spot, that would not be a no a bad spot to pretty much go long on LNG here. Otherwise, if you're looking to pretty much buy, I would look to see if as close as you can get to where you bounce off of that 100-day EMA, close enough to that 148 spot, and you would particularly try to buy that off of support. So either 148 or 155, those are the two marquee levels that I'm watching here for LNG. And that's where it's going to have to be upon you deciding whether you want to buy on a meaningful, no, reversal action that's taking place above 155, or do you want to wait to try and buy at a lower price in the event that you end up retesting that 148 spot? All right, so that's what I would look at. I kind of want to zoom out here. Let's see how the weekly and the monthly actually looks on it. So you have the weekly here. You're sitting right at the 20 EMA. Nice bounce so far that you've had. That's a strong bounce that you've had. Uh, Not too much that otherwise that stands out to me. I still think those two marquee levels that I mentioned stand out as of right now. And then let's take a look at the monthly, zooming out even further, see if there's anything that is more convincing here. Nope, still tells me the same level. So I do think that's pretty much where you want to buy. I gotta say that's been a hell of a bull rally out of this name here, dating back towards the 2020. That's a hell of a rally that you've had so far. I have to say that's very convincing. But I would nibble at it. But I would try to nibble more so at support. I personally like to buy more at support than try to chase the reversal per se. So 148, if you can get as close to that as possible, I do think that's a lot more of a better entry, ideally, for LNG here. All right. So that's one that I do like. I don't see anything wrong with that. I think I'd be pretty much um, kind of crazy not to point out Tesla. I mean, it was a hell of a crazy day that Tesla also had. That was quite the drastic price action. I think, having an 11-point day in which the market just fades the entire little morning gap up that we had, that was a hell of a move. Just some key levels to kind of point out here. I'll be watching if we do get any more of an upside type of action here. I will be watching for this one to get a break over this 292 spot. You get a break over 292, That would set this up towards 297. Otherwise, given how much of the ATR is on Tesla today, and given an 11-point move, I would wait for it to see if it ends up breaking down below this 276 spot. I think that's where I would feel a lot more comfortable in terms of the short opportunity, getting a confirmation of that. And below the 276, that should take this down towards 264, in which case you're going to basically test what was resistance, prior support to resistance, in which you had a nice little reversal action between the time frame of May up until July that you potentially had a nice little reversal. All right, so that's just one. I wanted to pretty much point out some key levels on that one. Wayne, what's going on? FCX short term and 3 months out. Your general feeling on copper. Let me take a look at FCX. Let's see what's going on with her. That's a tough chart. I'm not gonna lie. That's relatively a tough chart. I would before I kind of just say blindly. Let me actually take a look at some marquee levels here in terms of this chart. I think the monthly obviously gives me a little bit more hope than looking at that daily chart. And then let's kind of just also glance at the weekly. Yeah, that's not pretty. I'm gonna be honest with you. This actually particularly does look like a little bit of a bear flag type of scenario that I'm watching here. If I kind of just give you a little bit of a zoom out here in terms of a nice little bear flag formation, this is particularly what I kind of see here, just playing out here, and that particularly does look like a little bit of a bear flag here off of the weekly. So I'm not gonna kind of discourage you about the fact that obviously I expect upside, at some given point, but okay, so you're thinking puts. All right, so I'm glad I'm not going against your opinion then. So I do think that there is downside here, given for FCX. That's a pretty mean weekly little bear flag scenario kind of playing out here. You also did lose the weekly 200 EMA. Obviously, you had the nice little rebound attempting to retest the 200 EMA as a resistance. So I would anticipate, as long as this remains here under this 28 half, I do think that there's going to be further downside. So 28 half would be where I would say is close enough to hopefully if you're saying you're thinking about puts, so I'm assuming that you're not in them yet. So I would ideally try to say that look to see if you can get close enough towards that 28 mark, 28 to 28 half. It would not surprise me if you kind of get a little bit more of a closer into that supply and pretty much trying to attempt to reclaim the 200 EMA and attempting to invalidate the bear flag. But 28 to 28 half, that's the spot that I like for the entry point on FCX for your puts. And then for confirmation of downside here, you're going to look for a breakdown here below this 25 half is where I would say that you should get a confirmation, a breakdown, and that should start to pretty much regress for FCX. In which case, downside that you're looking at for potentially your first target here, I'll be watching this down towards 23 for your first, pretty much your first PT to take profits. All right. So 28 to 20 and a half, you look for your entry point. First PT that I would be looking for is 23 to 23 half, and you look to pretty much secure at your first PT some profits there. All right. So otherwise, that's why I mean, if you guys are kind of not understanding, zooming out definitely plays a big picture in giving you a better understanding. Clearly, you likely wouldn't have saw this bear flag pretty much playing out on FTX if you didn't look out towards the weekly. And a lot of us, like, most of us pretty much wouldn't look out that far out to the weeklies and the monthlies because we get caught up with trying to play the short term game, trying to look at, maybe the hourly chart or the 4 hour chart. But it's definitely a good thing to pretty much zoom out, get a bigger picture, look at the bigger levels, try to gauge it off of your pretty much your bigger levels or your EMAs on this. And it definitely gives you a bigger picture. Like if you actually see off the FCX here, you clearly pretty much tapped your 100-day EMA, you had a beautiful bounce and you were basically not you rejected perfectly right off of the 20 EMA. Like you see how ideally how perfectly this played with just your EMAs but on a larger degree time frame, right? And then once you got the breakdown, you saw you pretty much broke down off 200 EMA. You got the attempt to reclaim. You rejected right off of where? Off your 20 EMA yet again for the second time. So that's kind of just one thing I will echo. Hopefully it helps some of you right now that are listening. Is definitely try to zoom out to those, the daily, the weekly, even the monthly charts, and then look at your EMAs to see at what point that you ended up retesting, or you're possibly going to retest as a supporter to resistance. All right. But other than that, I went through a few names here. Hopefully that kind of gives you guys a little bit of an idea. Like I said, we do have Fed speakers tomorrow. Let's see if that's maybe something that kind of gives us a little bit of what we saw this morning, kind of catapult to snap this little, I think it's potentially about a 6 day red streak that we're flirting with right now. So you would have to think at some given point that we're going to snap this red streak in the broader market here. I don't see a reason why maybe tomorrow's not that day. If the Feds give us that kind of relief, they say something positive about the outlook, the further outlook of the economy, that may be something that the market particularly needs to hear, and that's probably the catalyst that ends up being the reason why we see some kind of short-term relief. All right. But other than that, though, I will leave today's segment there. Hopefully, I was able to kind of give you guys a little bit of an outlook, a little bit of some guidance and things to look for. But other than that, I will leave you with that. Appreciate you guys joining as always. Glad I was kind of able to help you there, Wayne. So you guys all have a great afternoon. But otherwise, I will see you guys later.